My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica, coming to you from San Francisco. Other people make friends. I'm just trying to make a little money. My job is not just to entertain, but to explain. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. There really are two economies in this country. There's the one that needs lower interest rates because business is slowing and it's harder to find a job. And then there's the one that says we don't really care about where the stinking rates are. That's how we could get a double rate cut today and still go lower. And then surprisingly see the Dow dipping 103 points, S&P declining 0.29%, and the Nasdaq shedding 0.31%.
All aboard!
We're out here in Silicon Valley where the stinking rates don't matter. So nobody cared about today's half-point rate cut, even if you think they should. If you bring up the Fed here, they look at you like you're some sort of clueless dinosaur headed for extinction. Well, T-Rex Cramer has this to say. The part of the economy that needs the Fed to go big got its wish today. It didn't matter as much to Wall Street, but that's not because lower rates don't matter. It's because for these kinds of stocks, well, we saw it all coming. Last week, the Fed started leaking that it might give us a 50 basis point cut now that we've finally gotten a handle on inflation. So the double rate cut was already baked in. We rallied on this news last week. We're not going to do it a second time. That's not how it works. So don't read too much into today's action or any one day's action. There are so many companies I talk to that truly worry about the economy that say they can't make their forecast because rates are too high. We've been hearing that from most of the retailers, some of the restaurants, especially the ones that cater to the less well-off. They needed this double rate cut, believe me. Oh, it is great for housing, and it can help the industrials. Those stocks ran in anticipation. They sold off when we got what we wanted to. That is very typical action. But how about the tech economy, the one that's based out here where we are right now? Look, when you're talking to companies in Silicon Valley, it almost feels like the people who run these companies, they're like inmates who escaped from the asylum of interest rates years ago. What they do is exploit holes that allow them to become integral to the enterprise. See, they don't really care about you, about the consumer. They're selling to businesses that then sell to you. So their total addressable market doesn't hinge on interest rates. It hinges on how innovative they are. That's the story you've heard from all the companies we've interviewed. These are companies about innovation. You see, these tech companies, they're not selling homes. They aren't selling wash machines or cars or steel or plastic or things worth less than $1 that are sold for more than $1 at a dollar store. Housing, of course, needs lower mortgage rates to get sales going. Tech doesn't care about mortgage rates. They just want to create some software that reduces some of the friction that you get in the process of buying a home. Lower rates make it more likely that people start new companies, but most new companies are too small to need major enterprise software companies that we talk to. So small cap companies can go up as they did, but big enterprise software, not so much. The Fed wanted to be sure that inflation is contained and going in the right direction, which then did allow them to relent and cut by 50 basis points. Now more businesses, in the East particular, can thrive. But out here, the presumption is that all enterprises are trying to raise margins, often by automating everything that can be automated, which only means using fewer people. These tech companies are automators. They never want to be hostage to the Fed. They don't want you to be hostage to the Fed because that would be a sign of weakness. It would be a sign of cyclicality. Oh, they hate cyclicality. Why be hostage to the business cycle if you don't have to? The thing is, these tech stocks tend to be winners when the Fed keeps rates high and the economy's slowing. But when the Fed slams on the accelerator, as it started to do today, Wall Street abandons this group and piles into the companies that can post big earnings gains with much lower interest rates. Now, that may all sound strange to you. Obviously, the real world makes no distinction between a company that does well all the time and a company that does extremely well some of the time. However, in the crazy world of the stock market, we only have so much cash to go around. And right now it's flowing into companies that would have been doomed in a world where the Fed didn't start cutting rates. These companies have stocks that are much prized right now, so the money funnels into them. Everything else went up, but couldn't stay up after the rate cut. These did stay up. Unfortunately, there are not enough of them to allow the averages to close in the black. That's what we close in the red. So is every player doomed to the same small part? Are the stocks of all tech companies weaker now? Can nothing transcend bit part status? Like when I went out for Bye Bye Birdie or Guys and Dolls in high school, I mean, first, no publicly traded company would ever be that low as I was. I was totally expendable. Other than Arsenic Old Lace when I played Lieutenant Rooney, I don't think I ever spoke a few words. But there will be stocks that shine, even in tech, with rates coming down. However, we come out here to find legitimate stars that can thrive regardless of the economy, and they don't do that well in days like today. Many of these outfits are about helping big companies do more with less, and there's always demand for that. They're not bit players. You bring in these guys to bridge the gap to perform better with fewer people. These are stars. To many people, that means one thing: artificial intelligence. Anyone who has the tech to create artificial intelligence is someone who can raise your company's gross margins, boosting earnings, even if it doesn't make more with sales, because sales have been slowing. Hey, you're going to hear from Workday, which has products augmented by AI that can often do the job faster and wiser than people. You'll hear from them soon. We heard the same story from Salesforce last night, but in the end, I am a realist. This is a day for people that need rate cuts, and it's day one. We've got many more rate cuts ahead. Those will create a backdrop of positivity for all stocks. Yes, they will have a positive bias. It's just that with a double-sized rate cut that everybody already expected, you aren't going to see a huge run in tech. It doesn't have the edge when we get the big cuts. Right now, the Fed's helping companies that need a healthy consumer or else, not companies that cater to a okay enterprise. Bottom line, on days like today, where we get a big rate cut, you want to own the stocks of companies that are doing badly, not the ones that are doing well, like the ones that we talk to. Almost all the companies I talked about in San Francisco are doing real well. They didn't need the help of the Fed to make their numbers. On days like today, we want the companies that desperately needed a rate cut because they just got what they wished for. But tech, it got out of the wish game a very long time ago. Let's speak to Sonny in Illinois. Sonny.
Hey, Jim, it's Sonny from Illinois, your longtime fan and admirer. How you doing, my friend?
I think this is call number 9 for you, Sonny, and I always enjoy you on the show.
Hey, man, I want to give you a big booyah from myself, my wife, Amal, my 2 sons, Jamil and Zachary. We all love your show, man.
Well, thank you, and particularly to the sons who like it, because that's the next generation that's going to watch me. How can I help you now?
And hey, man, I always like to give a shout out to New Jersey girl Nicole and your staff. They're doing a phenomenal job.
The staff is unbelievable. We're out here. I wish I could bring everybody, but I only brought those Regina Gilgan, I see Dylan Reebok. Wish I could bring everybody, but we've got great staff in New Jersey, too.
Yeah, man. And lastly, I want to give a shout out to your morning show, Carl, and your best friend, David.
Well, we should shout out my wife, Lisa, my kids, Cece. We got a lot of people to shout out. Or we can take a stock and maybe even do that.
Let's do that, man. Let's take a stock. I'm thinking about building a position in Walgreens. I know you're a fan of Mr. Tim Wentworth.
I am.
Do you think Mr. Wentworth can turn this company around and get the stock up from 9?
The great thing about Walgreens is it can only go down 9 points. I know that's a kind of a subtle hey, listen, it won't go down 10. Stocks stop at 0. I sure hope he pulls it off, but he's got to start spending money on the way that we heard people do things out here, artificial intelligence. Be able to cut some of the overhead and bring home more profit. All right, listen, on days like today, when we get a nice big rate cut, we want to be owning the companies that desperately needed that nice big rate cut because they just got what they wished for, not the companies that don't need it. Mad Money tonight. Do not miss my exclusive with some of the tech's top brass. First, I'm digging into data centers with one of your favorites, AMD, and hearing what its latest acquisition announcement could mean for the chip's powerhouse. Then, I'm looking to Las Vegas as Workday CEO joins me from the Software Stocks Product Forward event. Plus, oh boy, another one you love, T-Mobile. They just announced a partnership with OpenAI. So is buying at these levels after the stock cooled off a bit right call for your portfolio? Hey, I don't know. Let's check in with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
After a roller coaster of a year, AMD, one of our favorite chip makers, one owned by my charitable trust, basically flat for 2024. And remember, AMD is the only chip maker that comes close to NVIDIA in this artificial intelligence space. Yet now the stock's down roughly 80 points from its highs this spring. Something's wrong here. So let's check in with Dr. Lisa Su, the chair and CEO of Advanced Micro Devices, get a better sense of what's going on. Dr. Su, welcome back to Mad Money.
Jim, it's wonderful to be here with you.
Well, Lisa, I saw you get honored earlier this week. It was a terrific event, Time 100, and you were a featured toaster because you've done so much well. And you said something really caught my ear and attention. You said that we'll look back 10 years from now, and we can't believe what life was like now. Will you tell me what you're seeing 10 years from now that would make it so this seems also pedestrian?
Well, first of all, Jim, great to be here with you. And I have to say, I really do believe, we talk a lot about AI, but we're just really at the beginning of understanding what AI can do for us. And, if you take a step back, I've been in this industry for over 30 years. And we've seen, a lot of interesting technology. I mean, we saw cloud, we saw mobile, we saw PCs, these were all great technologies. But AI is something different because it makes everything better in terms of, it makes our businesses, more productive. It makes our engineers more productive. It makes researchers more productive. And it helps us really, I can see a world where AI really helps us solve really some of the world's toughest problems. And that's why I say, it was a nice event on a Monday night. It was one of those events where you could see, a decade from now, nobody's going to be asking, what was the ROI on AI? Right. They're going to say that AI is part of our life. It's how we live. It's how we run our businesses. It's how we do our research. It's how we teach our kids. That's the world that I see.
Well, what do you say to people right now who are watching who just say, you know what, that's just businesses talking to businesses. I don't see it impacting my life at all.
Oh, I beg to disagree. I really believe that AI will impact everyone's lives. It's just starting today. So, let's not be impatient, right? Tech trends are meant to play out over years, not over months. We've only been in this, let's call it, chat GPT world for maybe 18 months. We're all learning. It's fun. We all use it. Right. We use it to make ourselves, to answer questions for us. We use it to help us in sales and marketing. We use it to help us build chips, frankly, in terms of large language models. But now we're going to see it in all aspects of our lives. And, I think of it as, personal assistance. I think of it as education. Probably one of the areas that I'm most excited about is, what we can do in healthcare and what we can do in accelerating research. And, these are things that, if you look at the process that it would take for drug companies to discover new drugs, it might take years.
Right, and most fail. 90% fail.
Exactly. If you could change years to weeks, or days, that's kind of the superpower. And that's just one example. And the beauty of all this is you need the computing. And that's what we do, right? We do all of the foundation of the computing that enables AI to help us in all of these industries. And that's why I'm just so excited about where we are right now.
All right, now I want to disabuse some people of a notion. People tell me, well, listen, it's either NVIDIA or it's AMD. And to me, if you don't think that there's room for two, you really don't understand the space. But that's you taught me that. Let's teach others that.
Well, it's absolutely true. The way to think about it is there's no one size fits all in computing. There's no only one architecture. Actually, you're going to need the right compute for each application. I'm excited about AI everywhere. I'm excited about AI in the cloud. I'm excited about AI in PCs, so that we each have our own, sort of AI engines. I'm excited about AI at, the edge and infrastructure that we use, throughout, the entire world. So there are all kinds of different computing that you need. And the beauty of AMD is that, we've had this vision for the last, 10 plus years. This is kind of how we've thought about, so what do we want to be when we grow up? We want to be the high performance computing leader. And AI is a huge, huge piece of that.
Okay, but let me give you how I feel as someone who's followed you from when the stock was at 5, and you explained to me why to sell Intel at 50 and why buy AMD at 5. So far, so good. But you explained to me a roadmap, and it was a roadmap of Italian cities, and it was going to lead to triumph. And when that triumph occurred, your company would be worth a lot more. I don't hear much about the roadmap anymore. I just hear much more about AI. What happened to the roadmap, and is that not making you that much money anymore?
Well, first of all, let me take a step back and say, you need computing of all sizes. So if you want to talk about Italian cities, I could talk to you about Italian cities. There's really, think about it this way, Jim. There's like, three types of computing, right? There's, this big accelerator AI computing that we're talking about for our large language models and for, all of that stuff. We're at Dreamforce.
MI300.
Yeah, MI300. We're at Dreamforce this week. There's a lot of talk about what you need to do, with agents and things like that. There's traditional compute, and in CPU land, where our Italian roadmap has done extraordinarily well. If you think about data centers around the world, they need to become more efficient. There's too much old equipment. That equipment has to be upgraded. You need the highest performance, lowest power efficiency, overall total cost of ownership. We're now in our 5th generation of our Italian cities. So Turin is our latest and greatest, products there. We're just about to launch it in the next quarter. Lots of exciting things going on there. I talked about AI PCs that are also a very exciting trend that we're going to see going forward. In the PC market, where we have intelligence in AI, and then we also have our embedded computing, Jim. I've talked a lot about that. Sort of the what we're doing with FPGAs and adaptive computing. Aerospace and defense, we use a tremendous amount of AMD underneath that. When you think about industrial test and measurement, so we are computing across the board. Obviously, there's a lot of excitement around AI and accelerators, but they're really three major legs of our computing stool.
Well, it makes sense that the AI part is exciting because you put out some pretty amazing numbers for 2027. A lot of people initially felt that they were impossible. As we go on, it seems like that they're reasonable and rational projections, aren't they?
Yeah, absolutely. We see the computing market in AI accelerators getting to $400 billion by 2027.
No wonder we don't care about Italian roadmaps.
No. We love all compute. We love all compute. But when you think about the power of AI and where it goes, sure, that's where a lot of our focus is. We've made tremendous progress in our roadmap around accelerators. MI300 is our current generation. We're now on a 1-year cadence. So every year we come out with new hardware such that we can make AI even more efficient and more capable going forward. So we're launching our next generation here again in the 4th quarter. Then you'll see us with a new generation MI350 series in 2025, and then MI400 series in 2026. So our Italian cities plus our accelerators, you'll see just a tremendous growth opportunity.
And if we saw you in the same room as Jensen Huang, would you be able to say, you know what, I get along with a guy who's a decent competitor, or are things just too heated between the two companies?
Look, I'm a big believer in the technology ecosystem really works when you have, good competition and frankly, good partnership as well. And there are places where, we partner across the ecosystem, and then there are places where we compete. But the main thing is customers want choice, right? Our customers are the largest customers in the world. They want the best tech. Everybody wants to have the good choices, and that's what we're offering. We're offering just a very, very strong, high performance computing roadmap.
And that world works when demand exceeds supply, doesn't it?
It is one of those cases, Jim, where people have asked me over and over again, are we going to have enough?
Right.
And we are building, a ton so that we have enough computing capacity, but demand is very strong as well. And so, we're going to continue to ramp up the supply chain. But I view this as, again, let's not think about it as, what happens, over the very short term.
Right.
Let's go back to how we started with, we're going to look back at this whole time, 10 years from now, and we're going to say, what was life like? before AI.
I have to tell you, I look back 10 years from right now, and I remember where your stock was. I remember you told me what I was going to do, and had I said buy it at 5 and sell it at 7, well, I guess we would have missed a lot of points. I want to thank Lisa Su, AMD Chair and CEO. Don't grade it on a day when the Fed gives you a 50 basis point cut. That's not how to look at stocks, businesses, or Lisa Su. Mad Money's back after the break.
Coming up, is Workday rising? The other enterprise software star jumping for generative AI. Next.
This week, we came out to Dreamforce in San Francisco, but there's another major enterprise software event happening in Las Vegas. Workday, the finance human capital management software business, is hosting its own customer event, Workday Rising. Earlier today, we got the chance to speak with CEO Carl Eschenbach to learn more. Take a look. Carl, we've been really quite used to Workday Rising producing things that really are eye-opening that nobody else is doing. What have we seen this year that's going to make a difference for a lot of enterprises?
Well, first of all, Jim, thanks for having me. As you can see, I'm coming to you live from our user conference, Workday Rising, where this year it's absolutely our biggest, our boldest, and most innovative Workday Rising ever. And I can tell you, we have 18,000 people strong. I'm coming to you live from our Expo Center. We have more than 30,000 joining us online. And what we did this week is we actually launched the next generation of Workday AI called Illuminate. And we're going to now move from an era of how we've been moving towards AI through an evolutionary path. Now we're launching a revolutionary AI platform called Illuminate here at Workday. And our customers and our partners are super excited about the impact it's going to have on their businesses.
Okay, so right now at this moment, the Federal Reserve has just cut rates. I took it 50 basis points. What I'm trying to say to a lot of people is, you know what, that can help business, but it won't necessarily be what Workday needs. Workday is going to do well by being innovative, by being smarter than the other guys. Is that what Illuminate's about?
It is, Jim. And, you know, we can't control the macro. Yes, there was a 50 basis point cut today, as you said. There was a lot of, conversation. Is it 25? Is it 50? And quite frankly, we don't focus on the things we can't control. What we can control, Jim, is how innovative our platform is. And our platform, as you know, you've covered Workday for years. It is a platform that supports our companies and our customers' two most critical assets, their people and their money. And what we did at the conference this week is we took it to a completely new level with Workday Illuminate, our next generation of AI. And it allows our customers now not to just accelerate how they work, but now we're going to assist them. And ultimately, through the use of AI, we're going to transform their entire business by using agents that work with our employees and our customers in a peaceful way. We're not going to try to go out and replace humans. We're going to augment humans to drive a new step function change in human productivity.
We spent a lot of time yesterday with Salesforce, which is also using agents. They are a partner of yours. Are these similar to the agents that we heard Mark Benioff talk about?
Yeah, no, actually, Jim, earlier this morning during my keynote, we had Mark join us live via video stream, and we talked about the partnership we formed with Salesforce. And what's really unique about our partnership is the fact that in the enterprise, there's three systems of record that really matter. It's your system of record for your employees, your customers, and your financials or your money. And what we did today live is we showcased something we only announced 2 months ago, if you remember on your show, this new partnership and how our technologies are working together. And one of the things we showed is actually Workday agent with Salesforce agent working together to meet customers and employees in the flow of work where they're at, whether it's in Workday, whether it's in Salesforce, or whether it's in Slack. It was a powerful demo that we showed today. Mark joined us, and he was super excited about what we had to announce because it was very similar to what I think you talked about with him yesterday.
Yes, it was. And I want to get a little more granular for people who don't really understand the greatness that is Workday. You were doing things, for instance, in recruiting that make it so that you don't need as many people to do recruiting. But it seems like that you've got a more rational less emotional way to get the people who you really want. Can you describe that? Because that has some AI, it has agents, and it really has what companies really need, which is a better hit ratio when they hire people.
Yeah, it's a great point, Jim. One of the things we've launched over the last few years is a recruiting platform to help companies accelerate hiring. And once they hire people, then it's also about how do you retain them. But what we've done now is we've taken it to the next level. We're applying AI to recruiting with a technology and a product that we got from a company we acquired just a few months ago called HiredScore. In HR, one of the biggest expenses you have, Jim, is recruiting. And what we've been able to do is leverage HiredScore to reduce the productivity of recruiters by upwards of 30%, and at the same time accelerate the time to hire new employees. Then when you get them, we leverage that same HiredScore platform to drive internal mobility, which keeps your people at your company longer. AI applied to recruiting is a key strategy of ours, and our customers are seeing value today, not waiting for it tomorrow.
Well, if you're doing recruiting and you're doing human capital management and you're doing finance, it sounds like you're doing onboarding. Now, right now, I think of onboarding as being ServiceNow. Are you competing directly with ServiceNow with these products?
So we have a great platform that helps people automate the onboarding. It helps, first, as we talked about, it helps automate recruiting. Then we can automate it through our platform in the onboarding, and then we can also, accelerate the enablement of our people. Our platform is a platform that is purely self-service for everything HR, everything finance, and there is no really reason to jump in and out of Workday. Or if you're working in Salesforce, as I said earlier, you can stay in Salesforce and easily get access to the Workday platform. There are many other platforms out there, but there's no reason to start to have people jumping around. We can deliver everything we need to our customers for both HR and finance on the Workday platform.
Well, I know that you've done incredibly well during this period. Your margins have been expanding. Obviously, you're not hostage to whether the Fed says we can hire more, you'll be able to hire more people easily. It sounds like you are indeed hostage only to your own thinking, and your thinking is expanding right here, right now with AI.
I believe that is the case. That's why we're so excited to launch the next generation of AI right here at Workday Rising called Workday Illuminate. It will transform how people work, it will transform business models, and it will drive a step function change in human productivity, which ultimately drives growth and also drives expansion of operating margin. That's the Workday platform for our customers.
Excellent. Carl Eschenbach, Workday CEO from your terrific conference. It is so great to have you. You guys are doing a lot right, and I hope to see you soon in person.
All right. Great seeing you, and thanks for having us, Jim.
Thank you, Carl. Mad Money back in a moment.
Coming up, Cramer on line one. Does expanding 5G make this investment pretty in pink? We've got the CEO next. Connecting you to where you want to be. This player in pink has hit a market milestone. Now in the wireless race. Is T-Mobile not such an underdog any longer?
But what do we make of this nasty 3% decline in the stock of T-Mobile US after it held its first capital markets day in over 3 years? When the company outlined its plans for the future today, Wall Street clearly found something it didn't like, maybe? The stock started sinking after management rolled out their 2027 financial targets, even though I thought they were fine. They also unveiled intriguing new partnerships with OpenAI and NVIDIA, which we definitely want to know more about. That's why I'm thrilled to be joined by Mike Sievert. He's the president and CEO of T-Mobile. Mr. Sievert, welcome back to Mad Money.
Great to see you, Jim. Great to see you west of New Jersey.
Well, I can get here. It's not easy, but they allowed me. Now, Mike, one thing that is certain, the last time I saw you when the stock was down this big was actually the last time you got to buy before it just took off. Tell me what you said today in truth versus what the hedge funds were doing with their stock. I think you can tell me more than they can.
Well, probably, although I'm more of a business expert than a stock expert. I'll leave all that to you. But, we traded off from near all-time highs today in anticipation of this story. And what I'm told is some of the short-term money wanted a little more on shareholder remuneration. Right. We committed to up to $50 billion in stock buybacks and dividends. We increased the dividend as well. Now, it's a modest dividend because we're a growth company.
But our viewers want that dividend, and they want growth and dividend. You gave it to us.
We gave them more than a 30% bump in the dividend to reflect this big plan. But what we're hearing is that the long investors love this story. Now, they take a little time to get in.
Yes,
It is such an exciting story. We laid out that we are going to transform this business and continue to lead this industry, now from our high scale in terms of postpaid net additions, in terms of revenue, in terms of EBITDA, and in terms of cash. I mean, that's the trifecta. And so this growth company engine, we forecasted, listen, just drag it right, but it gets better and better.
But you did raise growth to a way that I think people would say, how can they do all that capital remuneration and grow like that? But you just have the right physical plant, you've got the right fiber. What do you say?
You know, we've been saying for years that what customers look for in this industry is a great value, a great network, and the best experience. And you look at the update we provided today, we remain the best value in this industry by far, and we have fame for it. And so that's really great. We will jealously guard that. And we have the balance sheet to guard it because we have the least net debt of any of the major providers. But the new news over the past few years is we have become the best network by any objective measure. And we've got room to run there because not everybody knows it yet. You know, brands are stubborn. They take a minute for that to soak in. So the more people realize we now have the best network, the more tailwinds we have on our business. And that's been fueling our growth. And then finally, we're transforming the customer experience with AI and data so that people get a better and better version of the Un-carrier over time. All that adds up to the market's fastest growing provider that's unleashing enormous cash flow.
Well, one of the things that you've done, you've been great to people who switch. You've been great because you offer a better Apple deal year after year. Now, we have this new phone 16. I listen to these services that tell me, hey, it's already bad. But I always say, let me talk to Mike Sievert. Mike Sievert, is the keeper of the data. How poorly is the 16 selling, or is that all nonsense?
No, it's nonsense. It's nonsense. This is another year of great phone introductions.
You're telling me the first week's been good for you?
The first week was better than last year. And so not only good, but better than last year. And people are buying Pros, they're buying Maxes, so they're buying up the food chain, and they're buying at a greater rate than last year. Now, what's interesting is we may actually see that this is better than last year to a slightly greater extent, because I have a feeling this cycle will be lengthened a little. You know why?
Right.
The AI features don't come out for a little while yet. And so that word of mouth of seeing Apple Intelligence on your phone and then telling other people about it, that's actually still in front of us and will take a few weeks or longer. They didn't tell us. So this cycle could actually last a while, but already it's a little bigger than last year.
Well, there it is. That's the news that I've been waiting for. Now let's talk about fixed wireless. Everyone's very excited about that product, but I always heard that when you got to 8 million, you didn't have any more room, but you didn't say that today.
Well, for the first time ever, we unveiled that we're increasing our target to 12 million customers
nationwide. That can cut in against other companies.
Well, look, it already is. I mean, we've been able, for 8 quarters in a row, we have generated each quarter more net additions in broadband than the rest of the scaled providers combined. That's just massive. So we've gone from nowhere to 5.6 million customers, on track for that 7 to 8 next year, just perfectly on track, and then increasing the target now to 12 million, because we've been able to figure out how to get even more capacity out of this world-leading 5G network. That means that these fixed wireless customers that we can pour in by the millions don't diminish the service of smartphone customers who are now enjoying the widest margin of speed advantage versus AT&T and Verizon that they ever had.
But let me ask you, I mean, are these customers that are new to TV and cable, or are they coming from somebody else? Are you taking share again?
60% of them are switching from cable. So the cable's the biggest contributor to 5G broadband.
Quality? I mean, because it doesn't buffer more than
people love the service. They love the flexibility of it. It's portable. You can take it, you can move. You just have to check with us and make sure that address works. But it's so simple, and so people love the simplicity. They love the low cost. Remember, this is the only broadband offer in America whose cost structure is not burdened by capital. Right? Capital's a big part of the picture, but this one's not burdened by it. The capital was paid for by the mobile phone network and mobile subscribers. And so that means we offer a great value with a product people love. It's the highest net promoter score, that means satisfaction, of any broadband product in America.
Oh, that's pretty good. Now, but there's another guy, Starlink, Elon Musk. Now people are telling me, Jim, get on that horse. Get off the T-Mobile horse. I don't want to get off a horse if that horse is winning.
Well, I'm a customer. I love Starlink, and they're partners of ours. Okay. So there are places in the world where satellite, is the only way to reach it.
Right.
And our partnership now with them will actually bring some of that signal directly to your smartphone.
But that could be a Trojan horse.
Oh, it's a phenomenal future. So, we have 192 satellites in space with SpaceX right now. They're rapidly launching, and we think we're on track for a beta program of the direct satellite to cellular program that we announced a while back. It could start late this year or early into next year.
Well, this could be existential for some of the other players if you get too far ahead.
Well, I just think that, the most important thing in mobile is coverage.
Right.
And with our dream is that if you can see the sky, you are covered. This represents the potential end of dead zones.
Well, wait a second. We didn't even talk about NVIDIA. I mean, how can we went for I don't know how many minutes. The NVIDIA partnership meaningful for anybody who has T-Mobile?
Absolutely. We decided to announce today that we're putting a stake in the ground that the future of network architectures is called AI RAN. And we're partnering with NVIDIA, with Nokia, with Ericsson, and others to bring the AI RAN future to reality. Now, it's going to take a few years.
Okay.
We're only halfway into this 5G revolution. It's been around 5 or 6 years. But we're now turning the page and starting to architect with our partners what future networks will look like to make sure everybody has a better signal.
In the meantime, I no longer have to give up on the Apple 16. It turns out it's doing better than we thought.
Absolutely.
All right. Thank you so much to Mike Sievert, President and CEO of T-Mobile. Remember, the last time it broke down like this was the last time you got in before the next big run. Mad Money's back after the break.
Coming up, lightning doesn't just strike twice in Cramerica.
Booyah, Jimmy Chill. Booyah, booyah, booyah.
Thanks for taking my call.
It strikes every day. Cramer is back in a flash with your questions. Next.
That's where I take calls. Robert Farr, you saying the stock I tell you bye, sell, just be good. No, sell cards ahead of time. My staff prepares some clevers on the pod. We pray into the sound. And then the lightning round is over. Are you ready, Skinny Daddy? Time for the lightning round quiz. Let's start with Nancy in Texas. Nancy.
Hi, Jim. I'd like your opinion on Iron Mountain, please.
Okay, I think Iron Mountain, which I like when at a 5 yield, when at a 4 yield, when at 3% yield was good. Now at 2.5, don't like it as much. It's had too big a move up, 66%. Let's move on. How about we go to Ron in Pennsylvania? Ron.
Hi, Cramer. I'm an investing club member from Bucks County and love your morning club calls.
Well, I'm from Bucks County too, so it's good to talk to you. What's going on?
Yeah, we're neighbors. Wells Fargo's had a decent return since I've owned it, but really nothing stellar. Every time it looks like it's going to break out, some news comes out about regulatory issues or a miss, and it just seems to unfairly penalize the stock. With interest rate cuts starting today and the upcoming election, I'm concerned that Wells Fargo will continue to be flying into the wind and struggling to string together gains, sort of like our Eagles on Monday night.
Wells Fargo's a winner, though. Okay, so Ron, let me tell you, I hear you and I feel exactly what you're feeling, but I am a believer in Charlie Sharp. He happens to be a head coach who knows exactly what to do with 2 minutes and 1 minute. He would never be fooled by things that you saw on the field on Monday night. I think that Wells comes through this fine. It's up 10%. I think it's going to go higher. It can go back to 61, 62. Let's hold on to it. Thank you for being a member of the club, and let's go to Joe in New Jersey. Joe.
Hello, Mr. Cramer. Thank you for taking my call.
Of course. How are you?
Good. Since Palantir Technologies has partnered up with Nebraska Medicine, is Palantir a buy?
All right, Palantir is a cult stock. It is a meme stock. It is a stock that has momentum because individual investors keep piling into it. It is not really even a stock. It is just a barometer of enthusiasm of some business that may or may not be doing well. I wish there were more to it. Let's go to Mark in California. Mark.
Jim, a big thank you to you and your fabulous team. Welcome back to Northern California.
The team is fantastic. I'm looking at Heather Gaines right now, key member of the team. Hi, Heather. How can I help?
Well, here's the north of the Golden Gate, hippy Marin County. Booyah, Cramer.
Wow, spirited. Let's go to work.
I want to tell you about PG&E. They're my local utility supplier, and they've raised rates significantly in the past few years, with another expected in October, really taking us where it hurts. Fire season approaching and rates about going down. Do you think this local utility would be a good investment to light up my portfolio?
Which one is it? PG, look, we've been behind Patty Poppe, the CEO, now for 5 points, and we are not going to get off that horse. No, well, no way. That stock is a good one. Rate increase or no. Buy PG&E. And that, ladies and gentlemen, the conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, this agent is no secret. Why a big Salesforce initiative could stand above the rest. Next.
Maybe parts of this market have gotten too downbeat, too skeptical. That's what I thought when I saw the muted to negative reaction to Salesforce's artificial intelligence plan, the one they detailed yesterday, where their software can create AI agents that are often much better than humans, at least when it comes to almost all things involving customers. Yesterday, CEO Mark Benioff fully explained Agentforce at his annual conference, and this new platform generated more excitement than I've ever seen at these festivals of tech. And I say that as someone who's been to a great number of Dreamforces over the years. It makes sense, too. Agentforce won't resonate loudly on a day when the Fed cuts big. Too many other companies that need a rate cut to survive steal the thunder on days like today. But if your company takes Mark's product, then the machines that answer your customers' calls will be smarter, more empathetic, and they won't just route you to some darn voice box. They'll handle the cases in a totally professional way. They'll care. No more press 1 for hours, press 2 for locations and the like. It's the kind of thing that could be a game changer for, say, a national drugstore chain. They're all doing poorly, right? Imagine if the machines could handle calls instead of overworked pharmacists. Of course, the presentation didn't seem to matter. The stocks still end up getting dinged today, down 1%. Double rate cuts will do that to consistent tech, won't they? But there will be plenty of days where the Fed isn't in play, and that's when the stock of Salesforce will shine because of this product. Why? Because the line to get involved to be a customer is longer than any I can ever recall for a new software product. You practically have to beg Salesforce to get into the darn program. So I've got to ask, doesn't this count as an important use case for AI? Last night, Mark Benioff, the CEO of Salesforce, sat down with Jensen Huang, the CEO of NVIDIA, after inking a cooperation agreement. And Jensen opined on the state of AI, a field he practically created. Jensen loved the Salesforce agent plan. Believe me, if he didn't like it, he wouldn't have shown up. More important, when Jensen talked about it, he said we haven't even scratched the surface of what we can be doing with artificial intelligence. Again, I think we're too downbeat about some parts of that. He defaulted to the healthcare benefits that we're already experiencing right now, where AI platforms are helping to cure intractable diseases. Mark concurred. Take a look at this.
I think the next 10 years, the breakthroughs that we're going to have in digital biology, the breakthroughs in just helping diagnosing disease, the breakthroughs in science. We're going to have so many scientific assistants.
Breakthroughs don't matter today. It's Fed Day, but they will, believe me. Mark also spent some time talking about how companies have already spent and lost billions of dollars building their own data centers with do-it-yourself software. That's a colossal waste of money. Hey, by the way, he compared Microsoft's Copilot to Clippy, their much maligned digital assistant that fortunately got discontinued 20 years ago. Oh, that got a good laugh. But Mark sincerely means what he's saying here. Clippy was terrible, but it was also everywhere. Mark acknowledges Microsoft's dominance with Copilot. It's everywhere. And he totally laments that, too. Jensen, however, deals with everyone, so he has to ration his chips, and there's no sign of any slowdown for him. He sees only a pickup as far as the eye can see. Didn't help him that NVIDIA stock finished down 2%. Didn't hurt him. He's not focused on that. Now, I buy both stocks here because their roles are often misunderstood. NVIDIA intends to make ever more powerful chips that can do unimaginable things. You heard the breakthroughs. Jensen thinks that Salesforce will have billions of these AI agents given the usefulness of the technology. Mark Benioff has added many great products over the years, but he seems most proud of this one. So far, it hasn't mattered to the stock. It's only been out, though, for a very short period of time, but a very high percentage of companies here at Dreamforce have already signed up for it. Ultimately, AI will end up doing many things. I'm skeptical about many of the initiatives that I've heard for AI. They tend to be old things that would have been done anyway, things that are just being rebranded as AI. But with Mark's Agentforce, I see something truly different and very lucrative for both Salesforce and its clients. If the Fed didn't have its big meeting, I bet the stock would have gone up, not down. I'd like to say there's always a bull market somewhere. I promise I'd find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow from San Francisco.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.